Many may be wondering, is the worst over for the crypto markets? Have we seen the bottom of this move, and are we ready to start to move towards the upside once again? Because you are seeing a bounce, right? But the relief rallies, one second. There we go. The relief rallies that you can see within these markets can be absolutely enormous, right? So it is time to be cautious. It's time to be careful. It's time to de-risk as well if you do start to see a lower high. I'll talk about the good, the bad, and the ugly in today's show, because we have seen, of course, Trump Jr. coming out by the dips with a Bitcoin B over there, and you see Michael Saylor underneath. Volatility is a gift to the faithful, right? So, you have big players like this coming out and starting to try and pump price publicly. Now, this could be a good thing and it could be a bad thing. It's all dependent on how price reacts. The bad part would be that if following these types of pumps and everything they throw at Bitcoin, it still won't go up. It means simply that there's more sellers than buyers, and sellers are in control, right? So we'll talk about that in today's show. We'll also talk about a Wyckoff accumulation schematic. I want to showcase, or at least build the case for how that could possibly play out. That would be the bullish hopium case. We'll talk about, is the cycle over? We did speak about that yesterday, but we'll talk a little bit more about that today, having a look at some key indicators. And then we'll also have a look at the M2 money supply, right, which has got some validity in terms of what could come next. And it ties in really nicely with that potential for a Wyckoff accumulation schematic, which is a schematic that we see repeat over and over within markets, right? Typically in uptrends, you go through these periods of markup phases into a ranging market, that being your Wyckoff accumulation schematic. You continue to reaccumulate, and then you put in the next markup phase. And that trend tends to persist until such time as you near the end and the trend ends, right? And you reach that first real distributor phase, which that's the question. That's the $1 million or $1 billion question. In some instances, even hundreds of billions of dollars. Question is this the start of a Wyckoff distribution schematic, or was it yet another shakeout and still an accumulation schematic? More on that in a moment in today's show. Smash the like button, hit the bell notification, subscribe to the channel. Appreciate all of you to be here, and let's get into it, right? So the M2 money supply, and if you look at the monthly change that tends to occur on this, there has been a little bit of a pattern over here, and you can see that recently, since November, it's pretty much been coming towards the downside. Now, although the stock market price has been grinding up, and we know that crypto and Bitcoin specifically tends to follow very, very similar to what we see in the stock market, right? So the stock market continues to flow towards the upside as well, and sometimes there's this lagging effect, right? I think it works out to approximately around 40 days later, right? You tend to see a drop in the stock market following the drop in the M2 money supply. So we need to just watch this and see if this does actually start to tick back towards the upside over here and move on up. That could be an indication that there could be a major turn in the market, and you would have found some sort of a bottom, right? So if you do look at it like this is the correlation that exists. If you look specifically at the M2 money supply, the global liquidity, and you correlate that to Bitcoin, well, this is exactly what we've seen, right? The green line being that M2 money supply. If you look on a more sensitive chart, this is month on month. If you look on a more sensitive chart, you'll see this has recently ticked towards the upside, and it's been pretty well correlated, right? So as this started to grind down over here, we did have crypto following suit. And the question is, now we're going to have any sort of a catch-up phase to that? That is the question, right? So this is something pretty interesting. If you do have a look at this, this was our first identified by Lynn Alden. Really nice guy. This is posted on Zero Hedge if you do want to see that article, right? So looking to the stock market, what do we have in terms of technical supports? We'll spend just a little bit of time on the traditional markets, since this does have, some sort of correlation to what's going to happen in crypto. Well, what we have seen is, if you measure your fib level from the low to the high, we've perfectly tagged that golden pocket over there. As you can see, the wick coming right into that zone, stock market moving up. And we'll see today if you can start to reclaim that 50% level, which is going to be very, very important. If you can see this as a major low within the S&P 500, well, that would be one strong indication that maybe, just maybe, there will be a bit of relief from crypto. I'm going to give you the exact levels, the safe zone, right? And I really encourage most people to focus on the safe zone before they re-enter into the market. That's assuming you're out, or if you're not out the market, around that safe zone, as you witness the bounce, would be the area of interest where you would look to at least hedge or de-risk, right? So that is the S&P 500 futures coming into key support over there. You have the MACD still crossing down on the NASDAQ, but still a series of high highs and high lows. Dow Jones as well. This one looks okay. MACD still needs a bit of time to reset over there. NVIDIA, if I'm not mistaken, NVIDIA earnings is coming out today. You can correct me if I'm wrong in the comments, but I think it is coming out today. Look, MACD looks like it wants to cross towards the downside in the daily time frame, and the NVIDIA chart has been very much range bound. So you could easily see if the results don't come out as expected, you could see something like that, and then you're looking for the reclaim of the mid-range, right? Maybe a little bit of a deeper shakeout over there. Looking at MicroStrategy, I have to be honest with you, this thing looks completely cooked. I think that there's extremely low chances that you're going to take out that high for a long time, right? This is probably going to go through a multi-year bear market. I'm not here to FUD you, shake you out, scare you, but this has been pretty brutal, right? It's come all the way down. If you have to work level to level, I would honestly just have a look at where the 50% level is of this part of the range, which would also be known as your range quarterly. And you should see that this has some confluence in terms of where those previous tops were, the little order block that led to the parabolic move. Therefore, you're looking for a little bit of support, in that $200 region, which you're coming close to, right? That $200 support should elicit a bounce. Again, I'm not here to shake anyone out of their positions. I know that I have a lot of older folks that watch the show who are probably trading, more traditional markets because it's safer with the size that you're in. Therefore, you're probably in things like MicroStrategy. Just as per the technical analysis over here, this looks like a major top. You got a new swing low, lower high, another swing low over there. Therefore, any bounce that comes out of this area over here, you have to expect it's going to lead into yet another lower high, right? And that's where I'd be careful. Start to de-risk in that type of environment. So that is MicroStrategy, right? Coinbase is coming back into the diagonal support, which has found support every other time when we've had a major low within the market, most notably in October. We had it in February, and then the most recent one was in September, just when Bitcoin went down to that 49K level in August, and there was a lot of fear around the market. Coinbase followed on to put in its bottom just after that, right? So you're now coming back into that key zone over there. You have failed the neckline of the cup and handle. There's still an opportunity for it to get back above. I think in terms of major levels, I would be watching for full invalidation. Of course, if it did get under that, if you want to give yourself a loose stop loss, that would be it. Break below that level and you're in big trouble, right? All right. Just a reminder also, we are dropping a lot of these traditional market trades. I have one actual live trade for you right now today in terms of the traditional markets, but we recently assigned a top-notch professional trader who focuses specifically and only on traditional markets. This is to help you hedge. So if you are looking to, position yourself in other markets other than crypto, but Forex, commodities, etc. This is the guy that's going to help you. It's in the Whale Room Discord over here. He gives you a massive amount of education. You got Wall Street Sings University over here teaching you exactly how he looks at liquidity and how to trade. And not only that, but he actually does prop firm challenges whereby you put down small amounts of money to win big amounts of money from the prop firms, and you can actually use that to trade with. And this is how he's made his bread and butter, right? So if you do want that information, the link is below to Whale Room. Make sure you jump in over there, join in, and there's a whole lot to learn. Now, for the trade, right? The trade, we spoke about this. Most of you, I know, have already prepared your accounts for this trade. We've been waiting for quite some time for this to come into the zone. And it's Tesla, right? Tesla has officially reached the fair value gap. This is a decent enough zone where I'll be looking for an entry in terms of at least eliciting a bit of a relief rally bounce over here. And then we can determine, following that bounce, is it actually a trend reversal or is it just going to set in a lower high? Either way, it doesn't matter. At that point, you've entered the trade, stop losses below, move the stops to break even while you're in profit. And then if it has a chance to run, we should position well enough to continue to hold that trade. And this is a relatively risk-free trade. Remember, if you use the link in the description below, it's listed below, BTC.D, deposit $200 and you're getting $175 for free, right? With that. So here's my BTC.D account. We can only take the trade when the stock market does open, but I'm going to start to look to scale into this position. As you can see, if I do try confirm the trade, it's going to say non-trading hours. This is traditional markets. We do need to wait for the stock market to open. This is giving you a 1 to 1.85 risk to reward trade over here. I do think that if it is still a bull market for the equities, which I think it is, you should take out this level, and this would be the first TP, and then we can start to look at Fibonacci extensions over there. So that's the one trade. Remember, on BTCC, it's not the only trade that we're looking at. We do also have other favorites that we marked off over here, and I just gave you one, right? Would be Coinbase as well. So if you go to Coinbase, this is another trade. If you are looking to diversify a little bit outside of crypto, this is a little bit of an area of interest, right? You're coming in to fill the gap as well. I'm only noticing that right now. So we have a little bit of additional confluence over here in terms of the futures gap. Remember, traditional markets trade on as futures. They don't open over the course of the weekend. And therefore, you have a gap here, right? You come into this gap, you expect the gaps to be filled, and they work very similar to fair value gaps, which are those big inefficiency candles, which we talk so often about. Therefore, you're looking for a bit of a reaction out of here. So I can make the argument that I'll probably take the Coinbase trade here as well when the US market opens later today. So use the link below, get your $175. You can put that onto the trade for free over there. I'll let you know how that goes tomorrow. I'm going to be scaling in. Now, let's get into Bitcoin, right? Let's get into Bitcoin. Let's get into the rest of crypto. I'm going to talk about the high time frame. Then we'll go into the medium time frame. And then we'll talk about the low time frames and the most probable outcome that is most likely to occur around that, right? So I'm going to try and make this pretty precise, quick, and to the point so that you guys can be on with your day and not waste any of your time, right? Bull market peak indicators. There's a whole series of different indicators that you can look at in order to determine, is the bull market top in? Are we in heated territory? Now, it's not impossible, but it's very uncharacteristic for the crypto cycles to top on extreme fear without any of these indicators hitting, right? Very rare. It's not impossible. Markets sometimes do change, and sometimes it is different, right? But is this time different? Is it really different? I don't think so. Probably not. It's probably not different. But at the end of the day, you still need to manage your risk, because you can't wait for a 60% drawdown, 70% drawdown, and then exit the market saying that, you know what, this time was different, right? I can't wait that long. I can't take a 70% drawdown on my entire crypto portfolio and then be like, okay, it is actually, this time is different, right? It's probably not different, but we still need to protect ourselves. So when you look at the bull market peak indicators, in order to try and exit somewhere near the top, what you can find is this: not even one single indicator of all of these indicators on this list, of which there's 30 major indicators that show, is the market overheated? None of them have hit, right? Not even single one of these indicators have hit. So one of my favorites to look at is the Pi cycle top indicator over here, which accurately within 3 days has predicted every single market cycle top. And have we seen anywhere close to that top occur? No. What do you need to see in order for that top to occur? What you need to see is a much more aggressive run. You need to see the 111-day simple moving average cross above the 350-day simple moving average ×2, which is the red above the green. And when you see that, that shows such an overextension from the mean that it has to revert, right? And at that point, the chances are probably that the top is in. And you can look at these prior times. You had two tops within this cycle. You had the 2013 April top, and then you had this top over here coming in December 2013. And almost to the day, these have been predicted, right? If you look at this one in 2017, this happened within, the top happened, I think, also within 1 day. And if you look at this one over here, the top happened within 3 days, and we've got nowhere near that. If we zoom in, where are we? We're actually below the 111-day simple moving average, which means maybe a little bit of a mini bear market, maybe a big shakeout that's currently occurring. At the end of the day, all we need to do is we need to look at that validation level, or invalidation if you're bearish, right? Have a validation. Where are you right on the trade, and have an invalidation. Where are you wrong on the trade? So stay tuned until the end. We'll go through the Wyckoff schematic. There is a level that must be reclaimed. If you do reclaim that level, you can say, maybe that was the biggest bear trap ever. Maybe that was the shakeout, and everything is as per normal. And we continue with the bull run, waiting to tick off at least some of these bull market peak indicators, at which point we exit our long-term portfolios, right? To be clear, I did outline on yesterday's show already, I am fully out, right? Because I am a full-time trader, I can position myself like this. Others may be different. You know, if you don't have your finger on the pulse every single day, maybe it's not a wise idea for you. It's probably better to play the longer-term investor game. But as for me, I'm able to jump in and out, you know, within an hour, within minutes even. I can jump straight back into the market fully right now. There's more than enough liquidity in Bitcoin. Unless you're trading $100 million or more, which to be honest, I'm not, and I'm sure you aren't either, then you're probably going to be fine, right? You're probably going to be fine. $100 million or more, sure. Maybe you need an OTC deal or something. I don't think I'm talking to you out there with $100 million, right? All right, so let's have a look over here. Big liquidations. We saw over $1 billion worth of liquidations over the last 24 hours. Of course, majority of those coming from the long side, but there are some shorts that are starting to get squeezed. We saw a big drop in the crypto fear and greed index coming down into the fearful zone. And I'd love to see this be a big shakeout, right? I'd love to see that. I'd love to see this be the biggest bear trap ever. But again, we need to wait for that validation level to be reclaimed. Now, these are some of the things that I would like to see to further confirm the big bear trap and call this a massive shakeout, and then look for a primed opportunity to gain an entry, right? Well, number one, we are in the fearful zone on the fear and greed index, right? Number two, I would like to see a little bit of negative funding start to build up over here, like we saw back in August, like we saw at the USDC-D peg, like we saw at the FTX lows, and that becomes a very, very strong buy signal, even if the market is starting to downtrend. Why do I say that? Well, if you look over here, in this period over here, the market put in a massive shakeout. We had strong periods after 2021, that first peak from 65K, price ended up dropping down. Can you believe that? All the way to sub $30,000. That was absolutely brutal. In short succession, you put in massive negative funding over there. That becomes a strong buy signal. Even if you are about to start a downtrend, it should elicit a massive bounce, right? In this instance, the bull run continued. You went up, peaked at $69,000. But again, you can see over here, bear market began, right? You had confirmation, a proper breakdown over there, big shakeouts again, and negative funding. That elicited a pretty sizable bounce, right? So the question is, where are we at, right? That elicited a 25% bounce over there. Are we somewhere around here, which we could still put in further downside? Or are we somewhere around here, which is just a shakeout, and we're going to continue the uptrend, right? Well, only time will tell. But one of the things that I'm looking at that is a little bit of a warning sign, again, other beyond this, is if the market can't move off this type of stuff over here, it has to retrace lower, possibly down into the $70,000 region. The other thing is that if we have a look at this over here and the fear and greed on a chart like this, where we highlight the colors, so you can see exactly the last times we were in the 20 to 30 zones, it's been very, very rare that we've been in this phase of the market, which is where a lot of people think we are. We're just in a shakeout, and we're going to go into this parabolic phase over here. When you put in those 20 reads, right? We haven't seen that before. We had it a little bit over here during this August period over here. But again, declining volume. We need to see volume come back in and very, very quickly a snap back into the trading range in order to send prices higher. So the reason that you want to be really careful is you don't want to be one of these guys, right? You don't want to be like this where, you know, price goes straight down, 99% down, and then you celebrate when you get a 0.5% move. This is very common within the crypto markets and on crypto Twitter. People become overly emotional with their positions. So today, yes, are we seeing a bit of green? Yes, we are, right? Look at this. You have things up, you know, 28%, 12%. We have TIA up 27%, MakerDAO also up 25%. These are pretty sizable moves over here. But how far down have they gone is the question. And the answer is a lot, right? A lot of these coins have moved down anywhere between 70 and 90%, right? So you don't want to be this guy. You want to wait for that confirmation. So, and the reason why is because USDT dominance is still on the rise over here. And on the 3-day time frame, you can see this downsloping trend line. You can see the prior support, flipped into resistance, 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 resistance. And you do have an area of interest. If it does possibly come this high, that can create a lot of damage, right? This could easily create one of these types of drops that we saw back in 2021. If you do put in, call it a mini bear market, right? That was massive. That was a 55% drop. Price reaccumulated and ran it up one more time. That is still possible. Okay, I think it's unlikely, but you have to always consider the worst case scenario of what will happen to your positions if price does this. So my point being over here is wait for the confirmation in the safe zone. There is a safe zone that you need to see price get above. So first and foremost, your stochastic RSIs are fully reset. So there is enough momentum if price does reclaim those safe zones that you could start to put in massive moves and have strong rallies in the opposite direction, that being towards the upside, right? So that's point number one. We want to reclaim that $90,000 level. That is essentially this zone over here. Now, we highlighted yesterday in the whale room as well as on the live show the key areas of significance, right? We talked about the triangle approach in terms of if you were looking for a long trade over here, you would buy smaller amounts over here because it's much more risky. And if price does get down into this zone over here, you'll be buying significantly more because you're closer to an invalidation zone where you can say that you're wrong. Right now, you can see you have this pivot level where price is running down, and price has perfectly tested that 1, 2, 3, and now 4 times. Not only that, but you did hit this weekly fair value gap, which is running across the screen over here, marked off in the white line. So that was one probable zone where at the very least we're looking for a bounce. You've now started to reclaim the 50% level over here, which means you will still have longs stepping in. The thing is with long stepping in over here, what they're simply going to be playing is the relief rally, right? To give you another viewpoint that makes it a little bit of a cleaner chart without all the noise over here, it would look something like this, right? Let's just quickly bring this into view. So you're looking at something like this, right? Price has broken down the trend. Therefore, this is ultimately your safe zone. Bulls are back. Theoretically, anything that bounces up underneath this level over here is better off to be shorted. Realistically, right? Realistically, you're better off shorting that. Now, the reason that there's multiple different options over here is because markets range and markets trend, right? And you need to ask yourself, are you in a ranging market right now, or are you at the very start of a downtrending market? Well, if you are at the start of a downtrending market, which could possibly go lower all the way down to, around that 70K region, it's a real possibility, then this is what the short trade would look like, right? Any bounces that come up into the zone give you a favorable risk to reward short. And even if you are still spot long on the market, it's probably worthwhile taking out a hedged position with a leverage short, which means that the bounce that comes up into this region, you're looking for weakness over here, probably around the breakdown level between about $95,000 and $96,000. You can expect some sort of a rejection. And then you can see, are you going to put in a higher low? There you go. Or are you going to just nuke straight through? That's the question, right? We'll find out soon enough. We'll find out in the next 2 weeks, I think. If we are going to do this, it's going to happen probably in the next 2 weeks, some point in March, right? This has been one of the weakest Februaries that we've ever seen within crypto. How can you say that this was a shakeout? Fully confirmed, 100%, and you have the safe zone to go long? Very easy. Take out the short stop loss, which means you get back above the breakdown level until price gets above this $98,000. There's just no way that it's worth the risk, right? You're looking for something like that, break up, reclaim, hold, and then you can start to say that you're moving into a long trade. Doing this, getting into this zone over here, could also possibly start to confirm that there was a Wyckoff accumulation schematic which has taken place. And as per the Wyckoff accumulation schematic, you typically want to enter into what's called the SOS phase, the sign of strength. We're going to bring up the chart in a moment. Firstly, look at the bottom. We have seen a rise in volume over there, which is a good thing, right? It's a good thing if you see bears attempt to break price down and you get huge volume, but they can't break price down. That's a good thing, right? It shows that they're probably going to give up. And then bulls have their chance to take over. The questionable part of this is this big enough volume? And to me, not really, right? If this was the spring phase of the Wyckoff accumulation schematic, which I'll show you in just a moment, I would like to have seen this volume much higher, something like that, right? In relation to these other volume bars that we have over here. I would have wanted to see it really, really, really spike up. And it's not to say that it can't. We could still see that, right? You could do something like this, then put in the high volume bar, spike back up over here, reclaim the trading range, and then we're set to go, right? So onto the Wyckoff schematic. That means you buy in the sign of strength phase. The sign of strength phase would essentially start to come into play. Your earliest point that you can confirm safety is reclaiming the breakdown level over there at 98,500. Now, in a few weeks, this is going to change, right? Because as we get more and more price action and data, we have more to work with. Right now, this is the level. Last week, this was the level, right? Last week, we said bulls are back above that level. Now, today, it's different. bulls are back above this level. In a few days' time, we might lower this, and that's how you get your validation lower and lower and lower, which means it's better to stay out the market as the market starts to trend down, and then you wait for your reattempt. So we're looking for the spring phase. Spring phase would be reclaiming the major support at the lows, which is going to be, as you can see over here on the chart, this low region at about $91,000 to $92,000. You can go to the descriptions, phase C. That's what you're looking for right now. If there's a Wyckoff accumulation here, it's phase C. In this phase, the market tests the supply or demand balance for the last time before a new uptrend begins, right? The spring phase, also known as the shakeout phase, is a below support price movement that is quickly, and that is the key word, quickly reverse and accompanied by a test of this low. This is where you're going to find out what it's made of, right? Is on the bounce over here, as price bounces, let's go back to this chart, you need to test the low. As price bounces over here, does it reclaim? Do you get a sharp reaction and a reclaim of the range low, or do you test it as resistance? If you test it as resistance, you're probably in distribution. If you test it and reclaim it and hold it as support, then there's the opportunity that this was Wyckoff accumulation. And then we start to look to phase D, which is the next phase. And this is where you can start to get some more confirmation. The SOS phase is the initial price movement that signals the stock or the crypto is likely to move higher, right? And ultimately, you go back to the last point of support to test it one more time as a higher low test, and then it confirms the presence of demand after SOS, and that becomes your buy opportunity. And that's it, right? That is what we're looking for over there. So here's your high volume area. We needed to reclaim that. You broke the range low. Long story short, you want to reclaim into the trading range above this $91,000, $92,000 region first. That's not enough. That's a clue as to what could come next. And then you start to transition from phase C, which is the spring phase, into phase D, and you get your full confirmation once you break above this area over here. And then you would expect the SOS phase to come somewhere within this zone over here. Timing-wise, if this were to play out, you're looking at somewhere around March, right? And we've used this multiple times before when the market has got tricky to much success, right? We've had major success looking at these charts before. Now, again, the only thing that we don't have yet, we need more pieces of the puzzle. But there's not enough volume yet. It could be enough, but it's like on a fine line. I want to see much more volume. And not only that, but you need to reclaim. Now, if you do start to close weekly candles below the bottom of the trading range, it's unlikely this is Wyckoff accumulation, but more likely this is distribution and possibly the start of a major downtrend, right? And therefore, you need to protect yourself. So I hope that helps. That is Bitcoin over there. You can always use the low time frames like the hourly to help to assess where things are going. I have the 50 and the 200 EMA over here, simply marking previous support, now resistance over here. And can you get above this? Or are you simply just going to rally into this and reject, right? Are you going to rally into this and reject and continue to make new lows? New York sessions have been absolutely terrible every single day. So we'll see what happens later on today during that New York session. Are you going to start to get a move up? Only time will tell. Our traders in Whale Room, one of which is scalp trader Farouk, you know, he's looking over here at the daily fair value gap as well. So something very, very similar. And this is his plan, right? He's looking for short trade. So you can always get different opinions. Jump into Whale Room. There's a lot of different traders over here. He has my group. You know, you have Chris's group. He gives a lot of psychology and lessons over there. And then, of course, you also have Josh, who's using a lot of the pitchforks, and he has some similarities to me when it comes with his pitchfork over here at the 0.31 fib at 85K, right? So potential bounce area. If you want these alpha traders, you know, destroy the like button, jump into Whale Room as well over there. The traders are absolutely crushing it. You can see we are making constant profits. Despite what the market is doing, we're still making a lot of profits. So Bitcoin dominance is an interesting one, right? We saw something different happen yesterday for the first time. It's not enough to act off, but it was something interesting, right? What was interesting about it? Well, while Bitcoin was dumping badly, you did actually see some of the altcoins catching a bit, right? Now, what could this mean? Well, only time will tell. Could be a final, you know, grasp of liquidity into the altcoin sector before smashing them down one more time. Or it could be a notable change in what's coming. You know, maybe there is something going on over here like this, right? In terms of the lag behind the M2. And if there is a lag behind the M2, the bullish case is you want to see this phase C play out with the spring phase, right? The sign of strength, the spring phase over there, high volume, you want to see break back into the trading range, then you can say that maybe this theory is correct. And maybe that's why some people started to bid the altcoins. But as per the trend over here, look, this was the previous confirmation that alt should outperform if we break below this. This is still the strongest area of confirmation, but you could make the argument that, you know, maybe you could give a secondary area over here, and you can say that start to pay attention if you see the Bitcoin dominance breaking below 60% over here. Otherwise, for now, Bitcoin dominance still seems to be more bulls in control than not. And the upside levels over here is your 0.786 at 66%, which would be pretty brutal, right, for the altcoin market. If you do want to trade these coins, any of these altcoins, remember there is a link below to CoinW. They're offering a special sign-up bonus, futures bonus package of up to $30,500 for the 𝗕𝗬𝗕𝗓 fam. If you use that specific link, you complete little tasks, and then you get in. And then also, again, a reminder, guys, we're taking this trade, right? Possibly Coinbase as well. I'll deposit a little bit more capital on here to take both Coinbase and the Tesla trade over there. All right, a lot of the altcoins have come down a lot. Some of them are fundamentally strong, you know. One of which is, if you look at World Mobile Token, is retraced all the way back down over here, right? All the way back down into the range. So all you have to do when it comes to any of these altcoins is just wait for the confirmation of the break of trend and to see that there is some strength in Bitcoin, right? Lower lows, lower highs, lower lows, lower highs, but coming into key support, possible high low on a wick basis over here, break this trend line, start to reclaim the previous month's low and open, and then things could start to look good, right? So we had a lot of coins that we looked at in the past that we said, you know, fundamentally wise, were pretty strong. Another one is Zentry, and it's going to be the same thing, right? All the way back down to its range lows. So you have got that full reset on a lot of these coins, and all you need to do is see that sign of strength from the bulls, right? So Zentry back at range low, wait for some sort of a shift in momentum. If it does reclaim the previous month's low, you know, there's an opportunity over there. Then there's an opportunity over there. Break this trend line, reclaim the previous month's low, and then you can start to say that maybe that's like the major wick low for the year. So we can have a look at some of these coins. Let me know if there's anything else that you want to have a look at. I see there's a little bit of a bounce on RUNE. We did speak a lot about RUNE. RUNE, we said, has a lot of work to do, right? All about those validation and invalidation levels. This would be your level that you want to reclaim, right? So if you go over here on RUNE, at the least, you know, you want to get back above this zone over here. So let's put it in orange. That was your breakdown level, probably even a bit higher, but let's go more conservatively and say, or more aggressively, I should rather say, and say 241. And then maybe something exciting starts to happen over there. But these things will take time. With a lot of these coins that got beat down, you know, you have to see a bit of a ranging market first. So this is typically what you'll see. Ranging market, reaccumulation, and then only after time it will start to pick up again. So another one that I want to have a look at is, of course, Ethereum, right? Ethereum over here as well. This was always the expectation, is based on this big wick over here, that you might come and chop about within this wick. So a risky trade, dangerous trade, but still, nevertheless, if you calculate your risk to reward correctly and your position sizing correctly, there is always an opportunity over here, right? Which would be this. You're trying to accumulate as close to the bottom of the range low as possible, hence the triangle over here. Smaller positions at the top, bigger positions at the bottom over there, and your hard invalidation, of course, below those lows. If it does break down, well, you know, this thing could cascade to like $1,500. It would be pretty significant. So monitor the charts carefully. I think that the safe play over here is for most people to try and rather focus on shorter term trading. In terms of, you work out your risk to reward ratio. This is what we're doing, at least in Whale Room, which is why we're making profits over here. We're looking at risk to reward trades. We risk $1 to make $5, etc. We take the trade and we leave. That's it. We make the money and we leave. We move on until such time as Bitcoin can start to break above those levels. If Bitcoin gets above that, then things change. Now you can start to move more into a hodler mentality once again, right? So the links are below, guys. Again, BTC.D, we're taking those trades on Tesla and Coinbase if you do want to join us. And then, of course, we do have also Whale Room for those of you that want something more out of trading. That's it from me. I'll see you all on the next one. I hope you have a lovely, lovely day, everyone. And we'll catch you tomorrow. Cheers for now.